What's going up, Bull Runner? Welcome back to the channel. Glad to have you guys here today. We have an awesome video for you. Today, Brad Garlinghouse came out and said they have now spent $200 million plus defending themselves against the greedy and potential corrupt SEC. We're going to cover that in today's video. We are going to also jump into the XRP charts. We did have an extreme downside move over the last 24 hours. Definitely not looking good. The weekly downside could have broke. So we're going to jump and take a look at that and see what's going on and much, much more in today's video. So thank you very much for joining us today. You are a genius for being here. Today's major headline in the Ripple case: defending against SEC to cost Ripple $200 million. CEO Brad Garlinghouse says Ripple CEO reveals $200 million spent defending the SEC lawsuit and laments about U.S. crypto regulation and a politics-first policy advising entrepreneurs to avoid the United States. And before we get fully into that article, this is pissing off Brad Garlinghouse to the next level. And so here he is posting today. As I just shared on stage at Dubai FinTech Summit, Ripple is expanding in Dubai with 20% of our customers based in MENA and clear regulatory regimes being developed. It's no surprise that Dubai is emerging as a key global financial hub for crypto innovation. And we already knew that XRP, or Ripple, was planning on potentially moving to Canada to avoid the United States. Now they're moving some big portion of their business to Dubai, which we know Dubai is extremely crypto friendly. So is the United States going to lose out on all crypto? And on top of that, we also have Brian Armstrong tweeting out today: the UAE deserves a lot of credit for being forward thinking on crypto. First dedicated crypto regulator in the world, a clear rule book published, business friendly, plus strong customer protections. Really enjoying my visit so far. So what is going on in the crypto world? Will we see the migration of all crypto business to Dubai? Whale chart post: the US will regret losing out on the crypto innovation 100%. You're doing God's work in the industry, and now I support Coinbase 100%, God's work, et cetera, et cetera. So people are actually excited about this. They're getting behind this too, because if you're in the crypto industry and you're a crypto consumer or a crypto holder, you want to know that there's clear regulation as well. So everyone could just get out of the United States, all the big companies. Now, will that prevent us, people here in the US, from being able to hold and use crypto? That's the next question. But back to the article at hand here. Ripple has spent $200 million defending the case brought against by the United States Securities and Exchange Commission, according to Brad Garlinghouse. Garlinghouse dropped the figure during a fireside chat at the Dubai FinTech Summit on May 8th. He stated that the U.S. is stuck compared with the regulatory progress of the United Arab Emirates Virtual Asset Regulatory Authority and the recent Markets in Crypto Assets (MICA) bill in the European Union. He went on to share that by the time the case is decided, Ripple will have spent $200 million defending itself against a lawsuit which, from its very beginning, doesn't make a lot of sense. In a message to the SEC chair, Gary Gensler, Garlinghouse expressed regret about the U.S. falling behind significantly as Ripple expands to the UAE. According to him, the tough thing about the situation is having a country that has put politics ahead of policy. Garlinghouse said one of the first pieces of advice he gives entrepreneurs when they ask him about getting something started is, if I were you, I would not start in the United States. He believes many U.S.-based companies, our U.S. public companies, would agree. When asked about the U.S. needing a clear regulatory framework for crypto, Garlinghouse said the SEC must understand that the vast majority of people working in crypto and blockchain are good actors who want to stay within the rules of the road but need them defined. Ripple, a cryptocurrency payment platform, was sued by the SEC in December of 2020, which claimed Ripple illegally sold XRP tokens as an unregistered security. Ripple has long disputed the claim, arguing that it doesn't constitute an investment contract under the Howey test. The case has been going on for 2.5 years and has created headwinds in the U.S. market. A decision is expected from the judge sometime in the next 3 to 6 months, according to Garlinghouse. So let me know down in the comments section, would you prefer that Ripple just go ahead and leave the United States, and that way they can get on with their mission and continue doing what they're supposed to do? Type in yes, YES, down in the comment section if you think yes. Just go ahead and move to Canada. Go ahead and move to Dubai. Get out of here. Or type in no, N-O, if you think they should stay here and prove the point against the SEC. So that way the United States can have an opportunity for open markets with the crypto in the future. So yes, YES, they should leave. No, N-O, they should stay and fight. Let me know down in the comments. And continuing with this theme of the UAE, Coinbase execs visit UAE to test potential and strategic hub for international operations. I think the US right now is a little bit behind in terms of regulatory clarity and some of the rhetoric from the top, said Brian Armstrong at the Dubai FinTech Summit. So all of these crypto companies over in Dubai right now, just absolutely crushing on the United States and the SEC and the regulatory body and what they're doing, which is quite frankly ridiculous because the crypto people know what they're doing. They're just not allowed to do it because the SEC, being ridiculous, won't let them do it here in the US. Following United States-based crypto exchange Coinbase announcing the launch of its global derivatives platform, key executives at the firm are meeting with industry leaders and policymakers in the UAE. In a May 7th blog post, Coinbase CEO Brian Armstrong said, and some of the firm's executive team plan to discuss the potential for a UAE to be a strategic hub for the crypto exchange. According to the company, it was working with regulators in the Abu Dhabi global market and Dubai's Virtual Asset Regulatory Authority as part of the efforts to potentially expand into the region. The UAE is exciting for us as a potential hub to build, as well as an international hub for Coinbase that could serve not only in the Middle East, but parts of Africa or other countries in Asia, said Armstrong at the Dubai FinTech Summit on May 8th. I think that the US right now is a little behind in terms of regulatory clarity and some of the rhetoric from the top. And here we have Brian Armstrong's tweet. Great meeting the Minister of Economy, H.E. Abdullah bin Tariq Al Marari in UAE. And you can see him shaking hands there, trying to make some big splashes in the crypto world, not just the crypto world in the US, but crypto world in the world. On May 2nd, Coinbase announced the launch of the Coinbase International Exchange, a platform offering crypto derivatives trading. The launch came amid the U.S. Securities and Exchange Commission potentially charging Coinbase with securities violations following the issuance of a Wells notice in March. Though Armstrong has sometimes been critical of regulatory clarity affecting digital assets in the U.S., he told shareholders in Q1 earnings call that he had no intention of moving operations outside the country. That was on the call, but now that he's visited, maybe he thinks a little different, right? He says here, the region is standing out as a leader in the development of a Web3 ecosystem, making it an attractive location to consider investing in. The vacuum created by other notable jurisdictions means that international counterparts such as the UAE are racing to fill the regulatory gap. Before its Wells notice, Coinbase officials, including Armstrong, had met with U.S. policymakers to discuss crypto regulations in the country. Chief Legal Officer Paul Grewal said that the firm had meetings with the SEC representatives more than 30 times over 9 months as of March, but largely did not receive feedback on its proposals. And we've been hearing that over and over from these companies that are being sued by the SEC. They continue to say we have an open door policy, but in reality, when you show up at the SEC as their open door policy states, you leave and all of a sudden, boom, they put a Wells notice on you and they're coming after you. So it's actually safer not to try and comply with their fake open door policy. The UAE has steadily opened up opportunities for crypto firms, seemingly to draw in capital and jobs. Dubai established a legal framework for cryptocurrencies and set up the Virtual Assets Regulatory Authority in March of 2022, taking advantage of the Emirates free trade zones with separate rules and regulations. So again, let me know down in the comment section, do you think Coinbase should go ahead and stop the fight here in the United States and just move to another country? Because they're also thinking about Canada, UAE. Let me know down in the comment section. Yes, YES, or yes, they should go ahead and move and get on with their business, or no, NO, they should stay and fight here as well because they did get the Wells notice and they may be going to court. And we do know that Coinbase is officially suing the SEC. Will that actually make it to court? We will find out soon. All right, and before we jump into the charts, which we'll get here in just a minute, we'll take a look at XRP, Ethereum, and Bitcoin. We're going to jump over here to Crypto Panic. What is trending in the markets right now? First and foremost, trending at the moment, MakerDAO boosts DAI lending capabilities via Spark protocol rollout. Garlinghouse reveals Ripple will spend $200 million defending itself versus the SEC, as we were just talking about for sure. Binance to adopt the Lightning Network to tackle this problem related with Bitcoin. Now, if you have not heard, Bitcoin was having extreme issues yesterday on the network. It was getting DDoS attacked. There was overusage. It was really expensive to send and receive, kind of like last bull run when Ethereum got crazy with its fees, gas fees. Well, Bitcoin was also experiencing this yesterday. And now Binance was not even allowing withdrawals of Bitcoin yesterday at all, saying due to network issues. But now they're looking to adopt the Lightning Network for simple and easy and fast transactions. Crypto community with 89% historical assets sets XRP price for May 31, 2023. Cardano ADA whales are buying. Will price remain bearish? Bitcoin-based BRC tokens combined market value eclipse $900 million. And Cardano DeFi activity skyrockets despite market dip. What's happening? Let's go and see over here. Crypto community with 89% accuracy claims price for May 31st. Again, not financial advice. None of this information on this channel is considered financial advice. Do not buy or sell anything because we talk about it here on the channel. And as we know, we had this crazy dip. Let's see, what are they talking about? Where is price going? Just going to scan this real quick. And it says here, specifically the social price estimates for cryptocurrency tracking platform CoinMarketCap have projected that the average price of XRP token on May 31st would be about 46 cents. So, that's up 3 cents because we just dropped 3 cents. We were just at 46 cents. So let's go ahead and take a look at the markets right now. All right, guys, so here we are on the daily charts for XRP. And as we can see yesterday, an absolute disaster, down 4.5%. We talked about this. We needed to be very careful. What did we talk about? We talked about there is potential downside because we had broken below the 50 exponential moving average on the weekly chart. And watch out. If for some reason we break below the 14 exponential moving average, that is a very, very bearish scenario. And boom, it played out pretty hardcore bearish after that. In fact, yesterday down 5, or this week so far, down 5%. That's including yesterday and today. It looks like we have a wick to the downside. One interesting thing that we can look at here is there was a fair value gap. One of the things we always talk about on this channel to be very, very careful of. Price does not like to leave fair value gaps. As you can see, it came down, filled most of the fair value gap. There's still a little bit running to the bottom right here at the downside. Will it fill it now? Or will it fill it later? There is a potential for it to just make a rebound here for sure, because if we take a look at this most recent swing low to the swing high here, we can see where did price get to? It's just about to that 786. So it got into the golden pocket here between 7.0 and 786. And so far it has battled back. But again, like I just said, there's 6 days left in this candle. For the weekly candle, there's potential of this thing still going down and finishing off this fair value gap. There's even a daily fair value gap that comes to us all the way back from March 21st that has not been fully filled. You can see it just barely got into there actually so far. So there's definitely more downside to the downside, but there's tons of upside potential as well. We can see here the ABCD move getting us back up into here on the daily price back to 51 cents. And that is also where our magic daily white line is still up here at the 51 cent level. So there's definitely a possibility. And we have not hit the stop loss. We talked about this yesterday. Market Liberator, again, not financial advice, but Market Liberator signals a long. Obviously, we had a severe drop from the long call of 48 cents. It came all the way down to 41 cents. So a 7-cent drop. Are we going to get the rebound from there? You can see right here that on the Market Liberator indicator, it has a stop loss down here at 39 cents, 40 cents basically. We talked about that yesterday. We had a pullback. Will we head to the upside? Now, the other thing we talked about that was very critical yesterday we covered was this trend line. Unfortunately, we did break down below that trend line, and we can see here on the hourly, that's when the severe fall started. So let's go ahead and get rid of the fair value gap so it's not so messy here. But look at, we got to that trend line. That's where we were sitting. We were hoping for a rebound back to the upside, getting back to this 46 cent level up here. Unfortunately, it broke, and it broke hard, and it kept on falling to the downside. And remember, there is a lower trend line down here at 37 cents. There's definitely a possibility of it continuing down to that 37 cent range. on the trend line here. So you can see right here. Let's go ahead and remember this trend line is actually based on the weekly charts. So we're from this bottom to this bottom here. That's our lowest trend line. And then from this bottom to this bottom here, we have this current trend line we have not tapped yet. And that is potentially where price could be getting back to here. So we will continue to watch that. And like I said, we have this fair value gap. That's really what needed to be filled before we start to move to the upside. When we look here at our RSI, there's still plenty of room for it to move down more and getting down here into the 30 level. We're not quite to 30 yet. Currently sitting at 32. It could, work its way slowly sideways and then down to the oversold territory before a rebound for the upside. Last time we were at these levels was back here, which was December 19th. And the last time we were fully oversold, meaning 30 or lower, was all the way back here, November 9th. And November 9th is right when the rebound and our bullish divergence on the weekly chart happened. Remember this candle to the downside, and then it started making its battle back to the upside there. So as we can see here on the 4-hour charts, we are very, very close to filling that fair value gap right here at 40 cents. Price could very likely return to that level. We have reached the 4-hour magic white line. Let's see if there's one below it. Anything searching for a lower white line here. We are under the 30, under the 1 hour, under the 2 hour, under the 4 hour. So if we use the Binance and we use XRP on the Heikinashi candles and we go back to that last extreme drop, the very last red candle before the start of the up move, this would be our supply and demand zone here. There is definitely a likelihood that that could be returning there 36 cents. So I'm going to keep my eye on that. And then I'm also going to go ahead and turn on that fair value gap one more time here to see. We also have this fair value gap, but that one's already been filled. We have this fair value gap that has not been filled. So that could very likely just get us back to that 40 cent level. And if it just continues the momentum back into, you can see every time it's gotten to this zone down here, it's bought back pretty strong. So it stayed here for a minute, bought back strong, double tapped here, took off, bought back strong. We also have really good news down here because we did have the weekly bullish divergence. The market baseline is starting to curl up. We're back at it now. So you can see this white line here. It's touching the yellow line right here. So there is likelihood we can rebound and bounce from here at the 50 RSI. We just have so many days left in this weekly candle, 6 more days. The new daily candle has just kicked off again. There is definitely a possibility it just refills this fair value gap and then makes its way to the downside. Heading back to Bitcoin, let's take a look at Bitcoin, what's going on over here. So Bitcoin is in one of its more powerful supply and demand zones. So if it holds here, that's very positive. If we break from here, that's not going to work out. So on the weekly chart, you can see there's still tons of room to the downside before we consider this a weekly sell-off because it has to break below this 50 exponential moving average on the weekly. However, when it sells off, it's going to sell off hard more than likely. Look at this big giant fair value gap here, getting us back to 22,583. And then we also have this fair value gap that was never filled that gets us all the way back to 17,000. So these fair value gaps need to be filled. The market does not leave open gaps. You can see this fair value gap here, this fair value gap here. That is for Bitcoin. Now, also news for the upside, we do have this likelihood of price getting back to this fair value gap up in here and filling it up to the upside. So right now, depending on how the markets respond to what's going on, we are seeing that there is a lack of momentum for the moment in the RSI. So it's starting to get less and less and less people excited about it. The strength is weakening. But as we've seen multiple times, when the strength weakens, price will make one last surge to the upside, clearing out all the liquidity before finally selling off to the downside. As we take a look here at Ethereum, Ethereum is also on the weekly chart. It's in its bullish posture. The 14 exponential moving average has crossed the 50, which is bullish. There's a fair value gap right up here that has not been filled yet, 2,300. Fair value gap right here at 2,600. And then our supply and demand zone we've been talking about up here at 2,700. Also, when we take a look at Ethereum, RSI continues to climb. It never reached the overbought territory of 70. Unlike Bitcoin, it got just to that 70 level 69.1 before breaking down. So there is definitely a likelihood that we could see another surge coming into the markets. Obviously, pay attention to the news, what's going to be happening, and we'll keep you updated. So make sure you subscribe.